Alright guys, I'm going to go ahead and put on the Budweiser cowboy hat. Unfortunately, I am not a real cowboy, but I do think the hat is really cool. And the World Health Organization says monkeypox is not a global health emergency right now. That is good to know. It's not going to move the markets, but apparently JP Morgan does expect a 7% rally in this next upcoming trading week because of portfolio rebalancing. Now, yes, you guys have probably heard all of that information so far, but we are going to go over a recap of what happened last week, what we can expect for this week, why it could be bullish, what could potentially cause this week to be very bearish, and then I kind of want to give you guys my overall view on what's going to happen with AMC, where the price target is for this upcoming week, and what we can reasonably expect. Hit the like button, subscribe to the channel, source your comments, questions, or concerns. Thank you guys for tuning in. If you guys want to come trade with me live in real time, portfolio rebalancing, a good time to join a new community and get some information, get some knowledge, make some trades, make some money, hopefully. Nonetheless, not financial advice. Anything that is said here in this video, you guys know what it is. Let's get to it. So first things first, what happened last week? We're going to do this in chronological order here. So what happened last week? The main market drivers of Friday, which was a very good sign. Just forever remember this. If you rally into the close on a Friday like we did, literally the last pretty much hour of trading, 45 minutes of trading, you just ripped to the upside, that is very good. That's a great sign, because Friday over the weekend, that's what collapses markets essentially. The worst days in the market, like Black Tuesday, right? Black Monday, Black Tuesday, depending on what side of the world you were on, back in 1987, well, what happened, right? Shit hit the fan on a Thursday. They hit the fan on a Friday, and then on Monday, you've seen a 22% drop in the stock market. That's because people were fearful over the weekend, rushed to sell out on Monday, because Friday was also a very bad day. So that's just an overall good sign. But what really happened on Friday, if you guys are unaware, it's the bank stress test. That was very good. All banks passed their stress test, and apparently on paper could withstand over $600 billion worth of total losses and an over 10% unemployment rate, 55% drop in the stock market, 40% drop in commercial real estate, over $100 billion worth of losses for essentially trading like hedge funds. And then what happened later in the day after we were getting some good momentum off of the first half an hour of trading or so, literally on the 30-minute mark of trading, you got the Michigan Consumer Sentiment survey that came out, and it showed that people expect inflation to sharply tick down throughout the rest of this year, down to about 5.3% by the end of the year. We're currently at 8.6%, so that was seen as a very good thing for the markets. That's why you got the gap up at the 30-minute mark, and you continue to slowly and steadily rally throughout the day until the end of trading. So Friday was a very strong day. Now, JP Morgan expects a 7% rally because Q2 was just so terrible. And when you see portfolio rebalancing at the end of quarters, you can get some pretty dramatic moves in stocks. For an example, specifically with AMC, where were we at the end of Q1? Well, the end of Q1 is actually when we've seen this big rally to the upside during this bout of portfolio rebalancing in between about March 15th and about March 28th. The stock started Q2 at about $30 per share. So what happened? A lot of people loaded on those shorts, and it looks like there's just not as many shares that are outstanding now that can be lent out, and multiple other reasons. But why we've been trading sideways over the last month and a half. Now, when you look at AMC again, or when a hedge fund looks at their portfolio and looks at AMC, they're going to say, hey, I think there's a lot more potential gain to the upside than a potential gain shorting the stock right now. Maybe we should take profits, get out of this position, cover on our short positions, potentially, right? So there is that, and I think that's why like Ray Dalio, the Swiss Bank, Citadel have all upped their positions in a big way over the last quarter, is because all of these things that we are talking about here in this video. So we do have portfolio rebalancing that's going to be a main focus of conversation for a lot of market participants. And then as far as the raw data, or really the lack of raw data, you have 7:30 in the morning tomorrow, durable goods orders. That's going to be the thing that can really move the markets in a big way. You do have Nike earnings also. If Nike reports something that makes markets concerned about whatever it is, consumer demand, or inflationary cost to actually make their products, that could actually be a pretty big weighing factor on the markets. So we're going to want to see what happens with Nike earnings, but that is on Monday. On Tuesday, you really don't have anything too crazy. Goods, trade balances, retail inventories excluding autos, wholesale inventories, house price index, nothing too crazy, right? Nothing I expect to move the markets in a big way. Wednesday, you really don't have anything at all. Thursday, you do have personal income month over month, personal spending month over month, PCE price index year over year and month over month, initial jobless claims, core PCE, and that's basically it. I think Thursday and Friday are going to be the big days, and on Friday you do have the ISM manufacturing PMI, which is going to be very important as well. But that means we essentially have Monday, Tuesday, Wednesday free and clear of anything that should move the markets in a big way. I'm talking like a 2-3% down kind of data point. We're not going to get that until at least Thursday or Friday. So it looks like, just off of what I'm seeing and how much the markets are still down, you could potentially rally in a substantial way. If you look at the S&P, I've been calling out this 5% bounce, 5 to 10% bounce from the bottom. And if we go ahead and look how much we've actually bounced from 360.17 up to where we currently are, you're up about 7.66%. So congratulations to everyone in the trading group, everyone that did essentially make money off of this bear market rally. But we still could rally quite a bit. If JP Morgan is right and we rally another 7%, hopefully you can make some money to the upside, but that's where the real opportunity is going to come in to short stocks. That would be slightly higher than where we were at back here in early June. In the 417 range for the S&P would be about 7% of a rally from here. So if that happens, great, we'll make money off of it. And then that is when you could put on some new short positions, because ultimately I do think we're going to hit lower lows once we get the next Fed meeting, which comes out July 27th, and then we get the advanced estimates for GDP on July 28th, the next day after that. That is when the markets are going to absolutely freak out and panic and hit newer lows in the markets. We know that essentially leverage, margin debt, has only went down $76 billion in 2022 so far in the first 7 months of the year. And that's only like a 10%, 15% decline, whereas the NASDAQ was down 30%. So if the NASDAQ were to hit newer lows, drop 5 to 10% under those newer lows, you are going to see massive rounds of margin calls and essentially forced liquidation. So I think that is very important to keep in mind. Now, adding all of this together, if you guys seen the last video that I put out, you could potentially see about 7 million shares bought just by the market makers if AMC goes to $15 per share. It doesn't have to get crazy from here. If AMC goes up another $2.50, then you're going to see about 7 million shares in total that have to be bought by the market makers. If we go higher than that, it gets a little bit more insane, but that would be about 69,000 contracts running into the money over the next 3 trading weeks. For this week that ends July 1st, next week that ends July 8th, and then the following week after that that ends July 15th. If you guys have not seen that video, go ahead, check it out. It kind of plays into this video and what we are talking about here in this video. So let's go ahead and take a look at the technicals and why I think this portfolio rebalancing is going to be such a bullish thing on top of everything else we've talked about, is because we hit that low on May 12th. And if you look at the markets, we just hit a low on June 17th. What was AMC doing on June 17th? Well, it actually went up 6.3% when the markets hit a low. It's not dropping in the same way as the markets are, and I think there's a lot of reasons for that, but I do think portfolio rebalancing will help AMC more than not. And if we do get that move, to $15 per share, and you get 7 million shares that have to be bought potentially in a very short amount of time, that could drive us past the 50-day moving average at $13.70 per share, drive us past the 100-day moving average at $16.04 per share, and put us closer to that $20 level. So I think that is possible for a price prediction. What I'm going to do is I'm going to put my price prediction range in between and above the 100-day moving average at $16.04 per share, and probably right at or under $20 per share. I think that's going to be a psychological level of resistance, and we do have to go back about 2.5 months to get back to those $20 levels, but I think that is coming in this upcoming week just because of everything we've talked about in the risk profile to AMC stock. It does not make sense to continue to short this stock. You have squeezed out all of what you're going to squeeze out if you are somebody with a short position. So I just don't think it makes a lot of sense to remain in short positions. And to be quite honest, I think a lot of this is really an egotistical battle. Like you can see right here, hedge fund manager taunts apes with AMC short position. Quote, "I dare all the meme stock maniacs to try to hurt us." That's a threat, and that does show where their mindset is. It's not even about making money at this point. It's about proving the retail investor wrong, because what? They don't want to see you succeed, because we're essentially doing this shit on our own. We don't need hedge funds. We're taking away from their business. And there's a goddamn fly in here. So that's great. But that is pretty much going to be all for this video. Let's go ahead and take a quick look at the short interest, all of that, if you guys have not seen that already. And the option activity for last week was very, very negative, was about 15% positive, 56 orders totaling $10.46 million. So not a lot of bullish options that did come through. A couple of them were quite interesting, but mostly you're just seeing a lot of very large put positions to really beat down the price of AMC stock. Those market maker shorts, I believe, have much more of an impact than the actual shares that are shorted on a daily basis. Now, the estimated value of shares that are short on AMC, the dollar amount is about $1.4 billion, so very, very large. The estimated short interest of free float is 22.51%. The free float out on loan, 37.15%. Shares out on loan, 191.48 million. Days to cover at 3.73. 100% share utilization. Cost to borrow max, 49.41%. Cost to borrow average, 24.81%. And cost to borrow minimum of 3.14%. So that is pretty much going to be all for this video. If you guys don't get it already, I am extremely bullish heading into this week, but there will be more downside, and I do think the overall markets will hit newer lows towards the end of July once the markets realize the Fed is raising rates, as we are in a recession, as inflation is over 8%. At the same time, we are doing quantitative tightening, which in general has only happened once in history, and that did end up resulting in an over 20% decline in the S&P and in the NASDAQ in 2019. So thank you guys for watching. Hit the like button, subscribe to the channel, do what you guys gotta do in that regard. You guys enjoy the rest of your day, and I will see you in the next one.